The COVID-19 virus has killed more than 900,000 people and infected over 28 million. Infections have been reported in more than 210 countries and territories since the first cases were identified in China in December 2019. Drug makers are scrambling to develop a vaccine. The World Health Organization, however, does not expect widespread vaccinations against the virus until the middle of next year.
There's a handful of vaccines around the world that are in what we call phase 3 testing right now. Now that they're up and running, we're just all hoping that they'll be successful. We may learn as soon as October, but more likely November, December.
According to the WHO, there are currently over 169 COVID-19 vaccine candidates under development, with 26 of these in the human trial phase. Front-runners have come under the spotlight in the investment world.
A lot of the attention that's been brought to biotech stocks of late had to do with the COVID-19 vaccine, regardless of who is the one to come up with it. I think the market's really keenly waiting for that to happen as well, and therefore really pumping quite a bit into investments here.
A number of clients have been looking for the stock that makes them 100% in a straight line. And this is one of the few sectors offering those kind of opportunities, clearly given how bad the global macroeconomic conditions are.
For investors, the vaccine race is a high-stakes game with equally high risks.
When you pick a biotech stock, you shouldn't be in a company that probably only has one super opportunity out there. And if that were not to come to pass, it would see the company collapse. So probably best not to be buying companies that are very early in their corporate development, but either a mid-cap company or a larger company. Larger company today is on low valuations. Mid companies come on higher valuations, and you may have to be more patient.
AstraZeneca, of course, is a global behemoth. If that vaccine fails, AstraZeneca is not going to crash because the vaccine is a small piece of what they do. A company like Moderna, which has been in the news a lot, they have a wide pipeline, but so far they don't have any other medicines or vaccines on the market today. So if the Moderna vaccine fails, that stock may crash. And if it succeeds, it may very well go up a lot too.
Some experts say that if you're considering investing in some of these vaccine plays, it may already be too late. But there are still opportunities in the broader biotech sector.
The risk today is significantly higher than 4 or 5 months ago when the valuations of essentially all of these companies was much lower. A lot of companies, sadly, are trying to take advantage of this situation and trying to position themselves as being competitive vaccine and therapy developers that really aren't. Even the credible good companies, in many cases, may be overvalued. And then you have a lot of pretenders. It happened with Ebola, it happened with Zika, it's happening now.
There's certainly been a lot of excitement with coronavirus, but other biotechnology companies that haven't been in that play are still been languishing. For example, you can still find a number of companies in the sector that are on PE multiples below 10 and yet have good long-term prospects. They're by and large the larger ones, but not necessarily. But yes, those companies' profits growth, earnings growth looks very mundane relative to the high-flying coronavirus plays, or indeed some of those with a therapeutic which has recently received approval, and they're looking at 40 or 50% growth. But I would say that those stocks on single-digit PE multiples do look extremely cheap, just relative to a broad market index.
Even if you did pick a winning candidate, returns might not come so quickly. Take AstraZeneca, for example. Its experimental vaccine, which has resumed British clinical trials, is one of the most advanced in development. The company is also targeting 3 billion doses of the vaccine globally. But even that sort of scale might not guarantee that it's a money spinner.
A lot of people have just been throwing money at these headlines and these COVID stocks without, I think, really appreciating, number one, the financials of this, and number two, the long-term picture. And another thing to keep in mind that's very important is that a lot of companies are not intending to profit off of this, at least not for the time being. So if you're a vaccine maker, you have to consider that you may have to compete with AstraZeneca that's pledged that while this is, a global problem, they're not going to profit off their vaccine. They're selling it for $4 a dose in many places.
Investors should also brace for volatility as developments, both good and bad, can affect share prices.
The volatility is at extremes. As companies go through the process of getting approval for their coronavirus therapy and vaccine, there's going to be good news and bad news. Those that drop away, as we saw with the Gilead company, see a dramatic fall in their share prices. It's as if the share price was only about one factor. So as long as you get that vaccine to market, your share price will be okay. But if you don't, you could see your share price halve.
It's very important to look at how many of these candidates and how many are in the pipeline for various illnesses and vaccines that they may be developing, but also in terms of where they are in the stage, that's going to be something that requires one to study. But ultimately, I think, for a lot of the laymen, if you really want to look in the sector, it might be worth considering the likes of ETFs as well. So for the likes of S&P 500 index, biotech index, there is also a corresponding XBI ETF, certainly ones to look at as well.